Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce around the market and look for something to trade. So, what's been happening in the market? Well, essentially, over the last, I don't know, what's this, March? The last 3 months, it's been going on an upward trend. It's been shooting up, which means volatility has been going down. And you can see right here, volatility of the S&P 500, which is what this is, SPY is S&P 500. Is down at 1. So it doesn't get a whole lot lower than that unless we go to the Qs and we see that that volatility is way down here at 0.4. So that's even smaller. Again, this thing's been on a rocket ride up to the moon for the last 3 months as well. And of course, we know the IWM has been kind of wallowing behind, but it looks like in the last couple of weeks it's starting to catch up. I mean, everything is kind of at all-time, not all-time, everything is at like 6-month highs except for the IWM. And the volatility is 11, which is still super low as well. So finding volatility in the market is tough right now, but it does still exist. You got to look around a little bit, and we did. If we go to a stock called AI, which of course is exactly what it sounds like. It's in the AI business. As we know, it's been a very explosive business in the last 6 months. And you can see here, volatility is way up at 41. You can see it's kind of at the high side of its range over the last 6 months. So here's the stock. Earnings is done. And the stock's been on a rocket ride since, and volatility is high. So we're going to get in. We're going to do an iron condor, and we're going to skew it slightly to the downside, meaning we're going to put the call side closer than the put side. And this is purely an assumption on my part. As a contrarian, when I see things go up to the moon, my initial instinct is to bet over time they're going to start kind of coming back to earth. It doesn't mean they can't rocket up to the moon. I don't know any more than you do, right? But you have to make an assumption at some point when you make a trade. And in this case, because it's been on such a rocket ride in the last few weeks, I'm going to bet at some point it kind of levels off, and over the next 45-ish days, it starts to drift back down and stay in a range. So again, I'm putting the call side a little bit closer than the put side, leaving more room for to drop than to go up. So if we go to the trade page, we go over here to the 40-day cycle. I know this one is closer. It'll be 46 tomorrow, but these aren't as liquid. So I'm going to stay with these, which are more liquid than the weeklies, especially in small kind of stocks. Generally speaking, the monthly cycle is more liquid than the weeklies. So I've already kind of settled up for us. The stock is at 37. So I'm going about, what's that? About $8 up on the call side, but you can see I'm going roughly $10 down on the put side. And that's what I mean by a skewed iron condor. I'm putting the call side closer to the stock price than the put side. Now, if you think the other way, if you think it's going to go up to the moon, you would move this up instead if you wanted to skew it. You'd move this up to, let's say, 30 and 27, and you'd move this side up to 47 and 50, right? So you'd do it the other way if you thought the stock was going to continue upwards. And in this case, there's 2.5 wide dollar strikes, which means I have to collect at least around 82 cents or more for this to be a valid trade. And how do I work that out? Well, minimum of 33 cents per dollar width. This is $2.50 wide, which equals roughly 82 cents, about 82 and a half, but we're fine. So in this case, as long as we collect 82 cents or more for this trade, which is $2.50 wide, it's a good trade. So that is our stock in AI for tomorrow, a skewed iron condor. And again, here are the numbers. Take care. So what is your goal here? Well, mine has always been to get to where my money makes more money than I make. Let that one sink in. Look, I'm just a regular guy with a full-time job, but every day I get home, I look at my trading account and I see that I have made money while I was actually working full-time all day. Now, wouldn't you like to see that too? That your money made you money while you were actually working? Well, you're never going to get there until you actually start. So don't you think you'd be a little bit more comfortable and confident if I was right there by your side making trades with you? Where now I will be there with my real-time alerts. You'll trade side by side with me in real time as I tell you what trade to make, why we're making the trade, and more importantly, how to make the trade correctly. But making the trade's only half the battle. When to close the trade is just as important, so you'll get those closing alerts as well. Listen, you've got the knowledge now, so let's put it to use. So how do we turn your knowledge into actual income with as little risk as possible? Well, the way we do that is by offering up the option alert for only $1 for the first month. Now, the option alert itself is going to send out 2 to 3 trades in real time as I make them via text or email directly to you. And as I close these trades, you'll also get those closing alerts in real time as well. Now, if you want an even better opportunity, the Option Pro, which is the exact same alert service as the Option Income, offers up all the content I've ever made, courses, webinars, etc. Over $2,000 worth of options courses for only $19 for the first month. So the way we're going to sign up for either of these is by going to sharpertrades.com, clicking on the products section. Both of these alerts will show up. Depending on which one you prefer, you'll type in these coupon codes and you'll either get the option alert for $1 for the first month or the Option Pro for only $19 for the first month. Look forward to seeing you all over there soon. Take care.